Most people believe their retirement plan begins and ends with a 401k or maybe a Roth IRA. And sure, those are great tools. But what if I told you there are other accounts hidden in plain sight that can slash your tax bill, grow your wealth faster, and give you flexibility most savers never get? In this video, I'll break down 3 secret retirement accounts nobody talks about in 2025. These aren't gimmicks, they're IRS approved, employer sponsored, and completely legal, but they're overlooked because hardly anyone explains them. Stick with me until the end, because the last one can allow you to put away tens of thousands of dollars more every single year, tax-free. Why this matters? Retirement planning is about more than just putting money away. It's about using the right accounts in the right way. Here's the problem. The average American only saves in their company 401k and maybe contributes to a Roth IRA. That's it, but here's the reality. The tax code is full of lesser-known vehicles that can give you a huge advantage. And because these accounts aren't mainstream, many financial advisors barely mention them. So if you understand them, you're already ahead of 90% of people saving for retirement. Secret number 1. HSA as a stealth IRA. The first secret account is the Health Savings Account, or HSA. When you hear Health Savings Account, you probably think of doctor's visits or paying for medical expenses. But here's what almost no one realizes. The HSA is the only account in America that gives you a triple tax advantage. 1. Contributions are pre-tax, lowering your taxable income this year. 2. The money grows tax-free, right? You don't pay capital gains or dividends taxes inside the account. 3rd, withdrawals are tax-free if used for qualified medical expenses. Once you turn 65, you can withdraw money for any reason. Yes, you'll pay income tax just like a traditional IRA if you use it for non-medical expenses. But by then, you've had decades of tax-free growth. Why does this matter? Because healthcare costs in retirement are massive. Fidelity estimates the average retired couple will need about $315,000 just for medical expenses in retirement. If you can cover that with an HSA, it's like giving yourself a 20 to 30% discount compared to using taxable money. Sarah, age 35, maxes out her family HSA contributions at about $8,000 per year and invests it in an S&P 500 index fund. Over 20 years at 7% annual growth, she ends up with roughly $320,000. That money is there, tax-advantaged, ready to cover medical expenses in retirement. And if she doesn't need it all for healthcare, she can use it just like a regular IRA. Don't treat your HSA as a debit card. Secret number 2, the 457B plan. The second secret account is the 457B plan. This is especially powerful if you're a government employee, teacher, first responder, or nonprofit worker. The 457B has rules that are completely different from a traditional 401k. Most people know the 401k and 403b have annual contribution limits, $23,000 in 2025. But contributions to a 457b are separate. That means if you have access to both, you can double your savings, putting away up to $46,000 per year. That's double the tax-deferred contributions, double the growth, double the long-term impact. Mark, a 45-year-old teacher, contributes $23,000 to his 403b, but Mark also contributes another $20,000 into his 457b. Over 20 years with 7% annual growth, that extra contribution adds more than $800,000 to his retirement balance. That's not just a little edge, that's life-changing wealth. With a 401k, you generally can't touch your money until 59.5 without penalties. But with many 457b plans, you can access funds once you leave your job. If you have access to a 457b and you're not using it, you're missing out. Secret number 3, the Mega Backdoor Roth. The last one is the Mega Backdoor Roth. In 2025, the Roth IRA contribution limit is $7,000, $8,000 if you're over 50. And if your income is too high, you may not even qualify. Enter the Mega Backdoor Roth. If your employer's 401k plan allows after-tax contributions, you can put money in above the normal $23,000 limit. In fact, the total annual 401k contribution cap, including employer match, is $66,000 in 2025. That means you could contribute tens of thousands more after tax. Those after-tax dollars can then be rolled into a Roth IRA. Emily, a 38-year-old engineer, maxes her regular 401k with $23,000. Her employer allows after-tax contributions, so she puts in another $30,000. Now, she's effectively put away $53,000 toward retirement in 1 year. At the end of the year, she rolls that $30,000 into a Roth IRA. Let's recap the 3 secret retirement accounts most people ignore. And nearly $30,000 of it is growing tax-free forever. Over 15 years, that strategy could add nearly $1 million in additional Roth assets. Not all employer plans allow this, and the paperwork can be tricky. But if yours does, the Mega Backdoor Roth is the single most powerful way to supercharge retirement savings in 2025. 1. The HSA, not just for healthcare, but a stealth IRA with a triple tax advantage. 2. The 457B plan. Double your retirement contributions and access funds earlier than 401k rules allow. 3. The Mega Backdoor Roth. A high earners loophole that can move tens of thousands into Roth savings every year. Most people never use these strategies, and they wonder why they struggle to save enough for retirement. But you now have the knowledge to take advantage of accounts that can legitimately change your financial future. If you found this video helpful, hit like, subscribe, and share it with someone who's serious about building wealth. And let me know in the comments. Which of these 3 accounts could you actually use in 2025? This is Money Moves, helping you learn, save, and stack